Welcome back. Thank you very much for staying with us. We've been tracking market trends and other economic data that confirm what analysts have been saying, that COVID-19 rather poses a clear and present danger to the South African economy, and the ripple effects from the economic dislocation elsewhere and the immense volatility in financial markets have already reached South Africa, and the risk of widespread contamination from COVID-19 in the country like this one remains high and requires skillful risk management and anticipation of its impact to be controlled. So let's check how the markets have been doing. We have Lavan Gopaul, who is CEO at Africa Merchant. He joins us from our Durban studios. Lavan, good afternoon to you. What have you observed from the downward spiral of the markets from last week? What has been happening today?
Greetings, Colin. Greetings to all of your viewers. We've seen our markets fall tremendously in these past few weeks. For the last few days, in fact, you've seen the impact of coronavirus hurt trading on the JSE. Today, in particular, it's been a spin-off from yesterday's statements by the president, and our market's fallen by more than 11% at one point today. Obviously, a number of investors pricing the value of different assets, given the fact that you will have this massive shutdown in terms of transport operation, a number of businesses, factories, offices, all going to be closed or working off skeleton staff, which show you that the economy has really come to something of a grinding halt. Whilst a number of our trading partners, very important trading partners, are almost at zero activity, investors are anticipating that that slow activity is going to affect all of corporate South Africa. And so prices have been slashed in an incredible way on the exchange. In fact, transactions in the last few days on the financial markets are reminiscent of what we experienced in 2008 and 2009 during the financial crisis. So I think that unfortunately, with this virus still at an early stage globally, with much uncertainty, many businessmen and investors are pricing it as something that will have a drag on us financially. It is likely to see all manner of industries slow down simply because of the coronavirus.
So, well, economists are proposing a mantra for the government that, prepare for the worst and hope for the best. So how worse can the country be hit, especially economic-wise, given that you were saying that it's still at an early stage? So then how worse can it get?
So one of the different takeaways from a medical point of view is that as they track a virus over a period of time, it would seem it goes through a session where the virus spreads, it becomes something that hits the population in its maximum way. It takes the shape of a bell curve, and then it starts to taper off. And from end to end, some of the medical specialists say that it can take as much as 4 months. And that is with the assumption of very good sanitization, with some very good communication, and people behaving in a responsible way, in a hygienic way. Of course, there is an element of silver bullet in that if we get an immediate solution, if we get some breakthrough in terms of science, then it could be faster. But if you look at the impact of a 4-month cycle, it can be very disastrous to a major economy on the African continent like South Africa. Many of our neighbors depend on us. Of course, us as a country and all of the population in South Africa are definitely dependent on a growing and an operating economy. If all things slow down in terms of transport, certainly it means goods that we were going to receive at our ports are now come to a halt. All of the manufacturing that happens in the country comes to a halt. You'll appreciate that not everybody is able to work from home. The mining industry and heavy manufacturers can certainly not work from home, and it means that factories will have to be shut down. So not only is it a case of a slowdown in terms of activity, but it means delivered goods to your home. That means the produce that you are going to buy may not easily be available. And so in other countries, you're seeing this mad rush to get to the supermarkets and to buy off goods from the shelves. And it really is because people are unaware of how long this virus will be with us. One of the interesting things that you may have noticed is the US Federal Reserve has slashed interest rates yesterday in an unprecedented move, taking action on a Sunday to knock down US interest rates to now 0.25%. The last time we saw interest rates this low was in 2008, and that's where the US government and the Federal Reserve tried to stimulate the economy. Whilst the Fed had cut interest rates so aggressively yesterday, they also indicated they'll spend $700 billion buying bonds and securities in the market to try and prop up the US financial markets. So you'll see that they are taking it quite seriously. And whilst other economies have been hurt badly by the coronavirus, and in particular, I'm thinking of Japan and China, as well as South Korea and Italy, they will show deep scars. Even if we find a solution for the coronavirus, the lack of activity that we've gone through in this period of time will leave a scar in terms of growth. This time frame is now lost. And so growth for the calendar year of 2020 will be marked by the lack of activity of coronavirus. At the outset, many economists were giving us estimates of at least 0.5% as being the impact of the coronavirus. And of course, only time will tell. As we realize that economies are not active, we'll then only be able to discover the true impact of its effect on growth.
All right, Lavan, thank you very much for that analysis. Lavan Gopaul is CEO at Africa Merchant, coming live from our Durban studios. And in other news,